if we could start a little bit in terms of, the first question, which is surely a central theme for all of us. I think that's really important. And so maybe I can start off with Zenon to share a little bit more. The question is this: what are the key trends that you see in cross-border payments today?
Yeah, and thanks to Sean and Visa for having me here. It's a pleasure to be here. I took notes, which Ridoy said before is very unprofessional, but I said I didn't want to step on his feet, and he said, don't worry, I'm making intelligent comments, so there probably shouldn't be any overlap, which was nice of him, very encouraging.
I had to write his notes as
yes,
well. Yeah,
yes.
Okay.
Look, I think there's a couple of different things that come to mind, and when we look at Asia, so our work is around market research and consulting on the financial industry. So we work with companies like DBS and Visa, actually, as well as fintechs and other players, and with the UN and other organizations. So I see both the developed side and the developing side of markets in Asia and those that are financially included and excluded. I think one of the key things is changing endpoints, right? I think we saw that during the pandemic where people started relying more on digital wallets for making transactions. Malaysia comes to mind as an example where a lot of the government G2C payments were made through the three main, what became the three main digital wallets in Malaysia. And so, over the past couple of years, these wallets that we're seeing as one point being, ancillary payment forms or destinations are now becoming key endpoints. So I think that's one of the first things that would come to mind. And sticking with Malaysia, I think the other thing that we're seeing is really governments trying to provide more cost-effective channels. We were having a conversation with PayNet, and the Malaysian central bank has talked about basically dropping MDRs down to less than 50 basis points over the next couple of years. And that's already on top of decreases that they've made. And part of that is the fact that they want to have cheaper payments for individuals and businesses in that market. And so we're seeing a real push of governments and regulators to provide this payment infrastructure, either in the form of real-time payment or other local payment methods in each of these jurisdictions to help people, especially coming out of the market. Now, another trend that kind of comes off to that is the race to zero. I think whether we're looking at card payments or cross-border payments or any of the space, there's an extreme pressure driven both by governments, as I mentioned before, and competition to get to zero. I was relating the story as we were prepping for this panel of moving $10,000 from the US to my wife's bank account at DBS, plug, to a US dollar account in Hong Kong. And so Citibank, my alma mater as well, charged me $25 for the privilege, but otherwise that $10,000 arrived into the Hong Kong bank account fully as $10,000. And I think, 10 years ago, first of all, my primary concern would be if it's going to make it there. And then secondly, did I pay $50 or $100 for the privilege of moving money? So I think that's one of the other trends. And then the last thing I would say is crypto, right? I mean, we're sitting here. I mean, the first reason I knew about this club when it was the Straits Club before it became the Mandela, is because it was a crypto ghetto of, as much as you can call, million and billionaires sitting around, but it truly was. It was just crypto. And this was, one of the places that a lot of that community in Singapore would come, and probably still does come to hang out. But I think crypto, along with stablecoins and CBDCs, are clearly something that we're looking at and getting a lot more interest. And I would say, just one last point on that, it's not just for the developed community. We do some work with the UN and specifically with UNICEF. And one of the things we're working on with them is in places like the Ukraine, where there's obviously a humanitarian situation right now. Traditionally, you'd look at crypto as being for technology savvy, well-digitized environments. Well, guess what? That's what the Ukraine is, right? And so they're looking at using crypto for humanitarian cash transfers, which is really, playing both sides of the crypto bros that hang out upstairs, as well as, delivering aid.
Perfect. Yeah, I think that takes a really broad macro view of some of the major trends that we're witnessing. And maybe I can then ask Ridoy specifically from a client perspective, and what are you witnessing from DBS specifically?
Sure. So I think I represent perhaps the demand side of the equation. So just to level set, and some of you are DBS Remit customers today. So we have a very large base. Thanks to Zenon's research, in fact, we established our market share as being quite outsized in the cross-border remittance space. And so we represent all segments of our base in terms of migrant workers, mass affluent, wealth, et cetera, that all use the digital platform. And I think, not to sound generic, but what we saw, let's say through the pandemic, was a real, a digital adoption trend in spades, really, because in 2020, our volumes grew, over 30%. What we saw was a massive adoption by what we call new to product customers, which is really interesting because 30 to 40% of the customers that used DBS Remit in 2020 were actually with the bank for greater than 10 years. So clearly they've been remitting, but not through the digital channel. So that's one trend that we picked up on. We also saw a surge in volumes to markets, the traditional EM markets, where typically you might see a cash and carry or using the physical MT or MSO. And that was quite interesting to see that surge. And what was interesting is you had people that hadn't used the service ever, use the service, and then we track by cohort what happens. And what we saw was 40, 50% actually started using it month after month after month. And that stuck throughout the pandemic and since borders have opened up. Interestingly as well, Zenon talked about crypto, and this is where, having good data analytics helps. March 2020, markets tanked. Literally the next week, we saw massive outflows to US brokerage houses, crypto exchanges in Europe, UK, et cetera. A lot of punters, excess liquidity, day traders, et cetera. So remittance is a nice kind of barometer of what's happening in the broader macroeconomy. But in terms of the trends that it led to, I think Zenon spoke to some of these because with the massive amount of throughput through our rails, it forced us to rethink about journeys and what are we solving for? Because with a direct-to-consumer business, it's really about, solving for the 80% of where the flows are going. And for us, without fail, every month it's the top 6, 7 corridors, your traditional kind of DM to EM corridors, where we want to make sure it's, fastest to deliver, best value, as many endpoints as possible. So I think it really made us sit up and think about customer journeys and how we can enhance, improve, and optimize.
And so with that, Rita, I guess maybe I'll turn over to Deepan, and I think it kind of slips in really well in terms of the next question, specifically around when you think about the industry at large and the banks and the fintechs that we work with, what's the view that you're seeing?
Yeah, sure. And just building on what Ridoy and Zenon have just said, I mean, on the industry trends and how that relates to banks and fintech specifically, the only thing I'd add really on industry trends is on cross-border P2P, I think what we're seeing is if we step back and look at a 5-10 year horizon, I'll call it cross-border payment microtization. Okay, the word doesn't actually exist, don't look it up. You heard it here first, right? But as things have become more digital, cheaper, faster, user experience has improved, what we've seen, in my opinion, is a reduction in transaction size on average for P2P and an increase in volume, right? My father used to send me money when I was an undergrad once a year, tuition fees plus living expenses, right? But with, I don't know if I trust my son with a year of tuition fee now, right? Because it's also cheaper, faster, quicker to send it, right? Use case diversification, I think, is another key point that banks and fintechs are grappling with. I think we talk about cross-border P2P, we get it. We get B2B, Asia's a manufacturing hub. We put widgets on ships that go around the world and dollars come back, right? That's B2B. But this whole B2B space that that Ram talked about in this intro, with gig economy payouts, creator payouts, et cetera, right? Airbnb host payouts, right? This is a puzzle that a lot of banks and fintechs are trying to solve for, right? And when we speak to banks and when we speak to fintechs, what we're seeing in addition to this is kind of two things, right? I think banks that are only relying on bilateral correspondent banking relationships to make cross-border payments and nothing else, in my opinion, are seeing a market share erosion, right? And a lot of banks are therefore seeking connectivity to an alternate rail or sometimes more than one alternate rail, right? So I think that is one big trend that we're seeing with many banks, right? And reach. Reach is a differentiator for banks and fintechs, right? Which I think could be geographic in terms of the countries, and also endpoint reach, right? Whether it's to account, which is what we all understand, but also to card and also to digital wallet.